report then. Aneel Gambhir, the CFO at Blue Dart, joining in on the show right now. Aneel, hi, morning. Tell us how the demand has been from B2B segments. Last time, I remember you expected about a 10 to 11% annual growth. Will you modify this guidance for FY23?
I guess what you mentioned about the guidance, generally we are not in the practice of giving guidance, but yes, we did share a positive outlook, and I guess we are maintaining that positive outlook as we move ahead. Though there is still risk of pandemic wave 4, but because of vaccination drive which government had, which was quite aggressive, and we know that we have developed some kind of immunity, and we have seen wave 3 has not impacted as much. So we believe that wave 4 also may not impact as much as is expected. So we, basis that, we feel that current economic indicators being quite positive, and we will continue to grow in double digit.
Right. So how much improvement in realization and growth in volumes has been witnessed for this quarter to support this kind of 21% revenue growth?
So let me comment on the previous quarter. We have had a mix of good mix of volume and realization growth. As we know that Blue Dart is in the practice of taking GPI every year effective for January, which we had announced in September. So we have implemented GPI, which is 9.6% to the customers, and that has helped us in improving our realization in this quarter. In addition to that, we had as I mentioned, that economic indicators being quite positive, and we have seen volume growth, healthy volume growth coming from B2B and B2C customers. So all of that had put together has given us a healthy growth of top line, which is about 21% for the quarter.
Okay, so Mr. Gambhir, given that your volumes have improved despite the fact that we've seen high fuel prices, how would you, really categorize that? What has been the reason for the improvement in margins, and what are the margin optimization strategies taking place?
One is a fuel price, which you mentioned about. So yes, there has been quite high volatility due to geopolitical situation. Fuel has been on boil. And as we know that we have a fuel price mechanism which is there for more than 2 decades now, which has helped us in neutralizing the impact of fuel volatility. So that has been successful even in the recent past, and we have passed on the increase of the fuel prices to the customer. That's why impact to margin is minimal. As far as fuel is concerned, in terms of improving margin, I think we have had a number of initiatives which we had undertaken over a period of last 2 years. That those have been yielding results, be it efficiency improvement of network, manpower productivity, and also the way we do business, looking at facility utilization and our aviation capacity utilization. All of this we have been working on to optimize it, duly supported by automation drive and digitalization. So that's where that is helping us improving our efficiency and improving margin.
And with improved cash flows and receivables, the company has now become debt-free. So what kind of new expansion plans can we expect?
Yeah, so very good question. As far as expansion is concerned, I think with the kind of top line growth which we have been having, so obviously we need to expand our reach, our capacity handling. If this positive economic indicators were to continue, we need to build up capacity not only on the ground but also air, and also ensuring that facilities cater to the requirement, volume requirement, so that we continue to deliver a superior customer experience. So we have been now for last few months on a drawing board to work out expansion plan, which I'm sure soon you'll get to hear about it in due course. So we have been working on ground, expansion, the facilities expansion on hubs and warehousing, and at the same time capacity increase for the air. Taking into account the enhanced infrastructure which government has been developing, be it a dedicated rail corridor or freight corridor, or also logistic parks which are coming up. So all that being taken into our plan, and soon we will be putting this in public domain.
Sure. And how's the demand from international charters that you started in the pandemic, and when do you expect realizations to kick in?
So again, this is very encouraging line of business which we have developed during the pandemic period. I think this is helping us in utilizing our asset, which is aircraft, leveraging that asset and getting good, though it is still in infancy stage, but has been quite encouraging result to add to the top line. So we expect currently pandemic is continuing and we have seen some demand on that front and we are continuing to meet the demand. So hopefully, this will continue. We are closely watching this space and will take up if, at a later stage, if this becomes a regular line of business for us.
Appreciate your time. Thank you so much for joining in and walking us through the outlook on how things are shaping up on your margin front, the B2B segment, as well as your realizations.